not for all companies, only for those with a turnover of up to 250 crores. The more important announcement, many might say, is the ambitious health cover that the government has announced for 50 crore people in this country. So 10 crore families at rupees 5 lakh per family is what the government has put there. We're a little confused on whether the government will be funding insurance premium or whether they will actually be providing medical reimbursement. That clarity was not available in this speech. Besides that, we also heard of an enhancement of the minimum support price for agriculture, free LPG to 8 crore women, free power to 4 crore people, and affordable housing fund to be set up, a 3 lakh crore rupee target for Mudra lending, a divestment target that was not ambitious at all at 80,000 crore rupees. It's just marginally higher than the roughly 74,000 crore rupees for this year. And finally, one word coming in from Arun Jaitley on the fact that the government does not recognize cryptocurrencies. We've got an esteemed panel here, and I'm going to kick it off first with both the market men. Nilesh, what do you make of the LTCG move? Because that's the first thing that the market is reacting to.
Well, I think the market has already reacted to that, and it was in a way along expected lines. I mean, clearly there's been a lot of talk, a lot of murmur about it already. So to some extent that was expected. And obviously we saw that immediate knee-jerk reaction. But I don't think it's something which is going to change the course of the markets. It's something which is an event which has come and gone. And market will begin to now start living with this new reality. So I don't think it's going to in any way impact incremental investments.
I wanted to ask Pranav about it because we had this discussion pre-budget as well. Pranav, what did you make of it? If you care to explain as well.
Sure. So what I think the finance minister is saying, we can look at the fine print, is that existing investments will stand grandfathered for all long-term capital gains that are earned in the next financial year. So one, the proposal is to be introduced for gains from April 1, 2018. Second, only gains in value above 31st January 2018 values will be taxed. So any gains made on investments made up to 6 months prior to 31st January 2018, the appreciation in the value of the stocks shares up to 31st January 2018 is grandfathered, and only the appreciation in value after 31st January 2018 will be taxed at the rate of 10% if it is a long-term gain. If it is a short-term gain, the grandfathering benefit is not available. But if it is a long-term gain earned after April 1, 2018, then the value as on 31st January 2018 will be allowed as a deduction as a cost of acquisition effectively, because only the appreciation beyond that number will get taxed in financial year 18-19 at the rate of 10%. I am assuming long-term capital gains is above 1 lakh. So I think that's what it is. If my cost is already above the 31st January 2018 value, I would feel that then that actual cost would be allowed as a reduction. For example, if I had bought shares 7 months ago at 100 and the value as on 31st January 2018 is 90, I would get a cost deduction of 100. But if I had bought the shares at 100 and as on 31st January 2018 the value is already 150, then I get a deduction for cost of acquisition of 150. And if I sell at 170, it's only the 170 minus 150 that gets taxed. And the tax rate would be 10%. That's, I think, what he says. All investments made prior to this date grandfathered to the extent of appreciation in value up to 31st January 2018. That means that income or appreciation in value goes untaxed even after this change or amendment, which gets effective from financial year 18-19. That's, I think, my take on what the finance minister meant.
Okay. Naganath, you want to add something quickly to it before I toss it over to the Economist and Raghav also for a big picture view?
I agree with Nilesh. I think, broadly this was something was expected on the long-term capital gains tax. I think the tax rate is modest, so, it should not have much of an impact, I think, incrementally, other than a minor blip that we've seen today.
Okay, all right. Taimur,
the one thing I might say is he's continuing with the securities transaction tax, so it seems. So now there's two levels of taxation. Securities transaction tax continues, and you also have a long-term capital gains tax at 10% and short-term as it is. So,
okay, let's get an Economist view in, and Raghav, then I'll come to you. Taimur Baig joining us this afternoon. Taimur, I'm assuming that you feel reassured by the fiscal deficit targets. I'm not sure what you make of what the cost will be of this very ambitious health cover scheme that they've announced today. What do you make of the budget in entirety and these specifics?
Right. It's probably a lot of the health-related budget would be old wine in new bottle. I mean, we have seen schemes like this in other areas have been announced in the past with much fanfare, and it turns out that once you consolidate state and central government contributions from various sectors, it doesn't really actually add up on the margin extra money. I mean, if you're going to have 0.2% of GDP reduction in the fiscal deficit and have modest disinvestment targets, I frankly can't see how there can be actually 50 crore people or 10 crore family times 5 lakhs each sort of an expenditure increase. So I think let's see the finer prints and talk about it. But if I may go back to the issue of long-term capital gains, I'm not just an economist, I also cover strategy for the bank. So let me point out that by international standards, 10% capital gains tax is not that prohibitive. There are many countries, developing and developed, who have had very successful capital gains regimes with significant degree of compliance with much higher rates. India keeping it at 10% with all this grandfathering, in my view, will be a very little medium-term negative impact for the market. The market will live with it. It won't be a big deal at all.
All right, we're also joined by C.Rangarajan, the former governor of the Reserve Bank of India. Dr. Rangarajan, your first take of this budget, he seems to have walked that tightrope rather well, not announcing any dramatic new expenditure, except for this health cover, which we're still trying to wrap our minds around and understand what the total, expense will be around that. And then some marginal increase in taxes. For instance, we heard the cess go up, the health and education cess go up from 3 to 4%. I'm assuming that's where he hopes to make some money from. A very, very marginal increase in the disinvestment target as well, sir.
Well, the fiscal deficit has been fixed at a level which is reasonable given the circumstances. Perhaps this year's fiscal deficit could have been somewhat lower, but at least for the coming year, the 3.3% of the GDP as fiscal deficit can be taken as reasonable given the circumstances under which the economy is. But what is not very clear is the litany of expenditures that he listed and how much of it is actually translating into actual expenditures. For example, there is the big scheme announced for the national health covering 10 crore families and so on. How much of it will be covered during the coming year? It's not very clear. As far as the taxation side is concerned, perhaps the only surprise is the long-term capital gains taxation. One had thought that with the introduction of long-term capital gains, perhaps the securities transaction tax will also be adjusted. But nevertheless, theoretically, there is a case for long-term capital gains, and perhaps he wants to push in that direction. And later on, at one stage, the securities transaction tax can be removed and a full-fledged long-term capital gains tax can be introduced. So by and large, the changes on the tax side are minimal, and the whole question depends upon how the expenditure programs will be mounted and how the total expenditures will be contained at the level it has been indicated in the budget.
Dr. Rangarajan, one slightly medium-term question. So I think they've decided to accept yet another committee's recommendation on fiscal consolidation, which also says that we eventually need to go to 3%. Actually, not eventually. The NK Singh committee had said that between FY18 and FY20, you need to be at 3% and maintain a debt-to-GDP ratio of 60%. We've never managed to meet that 3%, Dr. Rangarajan. We seem to keep saying that we will, but we are losing credibility, are we not, by saying that we will but not doing it?
Well, in some sense, yes, the reverting back to 3.5% in the current year does create some doubts. But hopefully that if the 3.3%, which is assumed for the fiscal 19, actually turns out to be that, then perhaps the credibility can be restored. But in fact, according to the NK Singh committee, eventually, in order to reach the debt-to-GDP ratio, the fiscal deficit will have to come down to 2.5% of the GDP. I do not know how that is going to be accomplished. But therefore, I would really think that we should still stay with the old FRBM Act and try to see that at least the economy the government is able to maintain a fiscal deficit of 3% of the GDP. The credibility question will once again be tested. But if the government really ensures next year a reduction in the fiscal deficit from current year, then perhaps the credibility can be restored.
Dr. Rangarajan, two quick questions. One on the tilt of this budget, very clearly focused on rural, very clearly focused on health. Infrastructure, we heard a little bit about it, but not as much in terms of spend numbers. Is there a shift away in prioritization, which is perhaps warranted given the way the economy has been behaving over the last year?
No, I think there has been a considerable amount of discussion on distress in the agricultural sector, and therefore the budget has to focus on it. So several of the measures announced are partly in the nature of providing relief to the agricultural sector. But some things are unclear. For example, it is said that the minimum support price will be 1.5 times the cost. Yes, the problem in the current year and in the last year has been that in the case of certain commodities like pulses, even though the minimum support price is fixed, the farmers were not getting it. Just raising the minimum support price by itself does not solve the problem. In order to solve the problem, you have to introduce an appropriate mechanism by which the farmers will gain. And that is not very clear, except it was said that some consultations will be made with the Niti Aayog in order to achieve this result. Therefore, a lot more needs to be done in terms of action which is required in order to implement some of the schemes suggested in the budget.
Dr. Rangarajan, one short, quick question. Did you get a better understanding of the health cover scheme than any of us? Because we're not sure whether this is a reimbursement of sorts. If you look at some of the Twitter postings by the Finance Ministry, they suggest that they use the words medical reimbursement. And it's not clear whether it's that or it's a payment of insurance premium of some sort. It's more likely the latter, because otherwise it becomes... exactly. When you do it for 10 crore families at 5 lakhs per year. But I just wanted to get a word in from Dr. Rangarajan on that. Sir?
No, I think it is very unclear. I mean, it is, if the numbers are taken as they are, 10 crore families, 5 lakh per year is a huge amount. And it is not possible within our budget to fund such a program. Therefore, it has to be in some sort of insurance premium or some kind of a program like that. But I think more details are needed. It is. I will agree with you. It is very unclear.
All right, sir. Thank you very much for joining us this afternoon and sharing your insights on the budget with us. I'm throwing it open to the entire panel here, but starting first with editorial comments from Raghav. I know Ira said this is a tilt towards the rural economy, but even to the rural economy, with the exception of the MSP, has he really announced anything substantial? Rural infrastructure didn't get any big outlay from what I could see. Correct me if I'm wrong. I think that free LPG to 8 crore women, seems to be something that's more a pre-election kind of sop. But I don't know what else stood out in terms of supporting rural. He's walked it very carefully when it comes to expenditure, hasn't he?
Yeah, it's an extremely safe budget, Menaka. Extremely safe. Well, yeah. It's extremely safe. And while you guys were watching the budget, I was also looking at 5 by-election results since the morning. It's 5-0 right now.
It's 5-0?
It is 5-0.
So Congress is leading in all 5?
BJP is losing all 5. So, and it's losing some of the elections. Ajmer, it had won by 1.5 lakh votes in 2014. Alwar, it had won by 2.83 lakh. 2.83 lakh. I'm just crore is my budget. 2.83 lakh votes. So these are massive victories for the BJP, which have reversed within 3 years. So I think he's played it very safe. He's given a lot of talking points. Now, when you say 1.5 times MSP, I'm not sure what the mechanism is, because he said 1.5 times cost of production.
Yeah.
Now, cost of production is a derived, estimable number.
It could mean anything, really, nobody knows.
So when you say that's a tangible give I'm not sure it's such a tangible gift. Because,
no, I'm not sure either. Which is I'm saying even that seems to be a little
conceptually it makes sense though. Conceptually, because I think one of the complaints a lot of farmers have that our costs have gone up, and MSPs may have risen but not commensurate with costs. So in terms of conceptually, it seems like a good architecture, but I don't know how it will play out.
But conceptually, he seems to have just said, I am going to stand by my poll promise that I'll make it 1.5 times. But for 1.5 times cost per, so we don't know what the cost is. I think, so it's extremely safe. This universal health coverage. Remember, last year they had announced universal crop insurance. And that also 16,000 crores of premia, I think, were paid to insurance companies. But the farmers have been complaining that they never got anything. Yeah. So here you may have a situation where you may get, the hospital stocks, I'm sure, are up.
They are. All of them are.
Because there'll be a lot of premium payout for their billings. So I think, again, you need to see details. So really very safe. I think they understand that they're up against a political challenge. I know popular commentary in the media seems to suggest that it's game, set and match. But I think elections like, again, I just want to throw in a little bit more of election analysis here, because I think that's really what this budget is aimed at. In the last 35 years in Rajasthan, not a single Lok Sabha seat by election has been lost by the sitting government. Not once. And today both have been lost. So there are straws in the wind about a mood change. And I think the finance minister and the prime minister are extremely savvy politicians. I think they detect that. So it's a very safe budget. There are some attempts at being bold. A cut to 25% for 250 crore turnover companies is not a minor thing. 250 crore does cover a large ambit of companies. And he said 99% of the companies. So 99% of the companies in India will now pay a 25% corporate tax rate, which is, it is on the fringes of being bold. I was expecting an inheritance tax. Honestly, I thought if there was one...
The word comes up every budget. The word comes up every budget. This year, I think he chose to, kill the LTCG rumor for once and for all by bringing it back. Next year, maybe we'll talk about estate tax.
Because that was perfect this year, inheritance tax. It would have added to the narrative of how we want to be... Well, and that whole bit about 1% of the rich people in the country own 73% of the assets. So it would have been a wonderful narrative. So I'm a bit surprised he did not do that. Excise tax on petrol, I thought that would see some kind of a cut, but that did not.
No, it didn't. Yeah, we spoke about that in the morning as well.
So that's quite the other thing which has gone up. And I think, honestly, today's ending prices, stock market ending prices, will be a collector's item. You'll have to frame it in your in your study, because if you're going to be grandfathered up to the end of days play today, then these stock prices will be quoted in tax returns till eternity, right?
Yeah. We've not got comments in from two people, and I know Taimur also wants to come in here, but neither Baig nor Partha has been able to speak. Partha, are you feeling left out? You got neither the corporate tax rate cut. You might get hit by the LTCG if you dabble in shares yourself. I don't know how much of the MSP will help you in terms of rural income translating into, sort of more purchases of your products. You didn't really get anything. You didn't get a better infrastructure outlay. Nothing in this budget, right?
Yeah, so in a broader sense, I think this is a far-sighted budget.
Far-sighted?
Yeah, far means farm, agri and rural focus budget. So all the focuses are around that, and there is allocation which is being made. So now we know allocations have to get converted to actuals. If it gets converted to actuals, this is a great budget from a rural point of view. And given what you just talked about from an external stimulus point of view, it will happen. Just think about the benefit to a potato farmer today. He has to throw it away because he can't even pick it out of the land, because the cost is lower than the amount it is to pick out of. Yeah, prices. So now at least that will be changed. So
how does that get changed?
Yeah, that gets changed if the cost of even removal is to be paid, or the cost is now.
Oh, so you're assuming assuming this 1.5 thing has got a underlying calculus
absolutely, and I'm saying that's what I said, and therefore the next point. Before I just give an overview and then we come to detail. उम्मीद और हसरत दो लफ्ज़ हैं, but इसी में हमारी भारत की दास्तां है. So on the corporate side, we have lost, but on the rural side, I think we have gained.
So that's ummeed hi hai na, sir. Ummeed hi hai na.
Har hasrat bhi hai na.
I just want to mark the markets once before we go on to Taimur Baig and get his next reaction. Nilesh also, of course, have to just take in a reaction from him. But it's been a volatile day of trade. But after that initial knee-jerk reaction, due to two factors, you could have argued that the FIS deficit number and the LTCG would have spooked the markets. Not quite. A bit of a reaction downwards and then a move upwards. Taimur, I heard you made an interesting comment saying that India will live with the LTCG. Foreign institutional investors will not get spooked too much. Care to explain a bit more on that, because the market's certainly not looking spooked for now.
Right. I mean, of course, the market must be looking for some excuse to sell, given how strong the gains have been in the past year or so. But generally speaking, right. I'm saying that, there can be all sorts of excuses to sell. This could have been also another excuse, but I don't think these things are substantive because there are many jurisdictions around the world where investors are happy to live with a long-term capital gains tax. India should be no different. So on the margin, your return for the long end might be affected to some extent, but of course with the grandfathering, it's not even that immediate a concern. So I really don't see it's a very big deal, not by international comparison or in the context of India. But it seems to me that as far as the populist aspects of the budget is concerned, that we think the answer to low inflation is inflationary policies. So, farmers are not getting high prices because demand is muted, so let's increase procurement price so that inflation picks up. So there is a some degree of incoherence in that policy, and I hope that, especially at a time when oil is going up and issues related to inflation would be at the fore in any case, hopefully some of this extra focus on rural populism doesn't lead to a bad problem already getting even worse.
In fact, I think that was the question, we all wanted to put to you, Taimur, on really what is the inflation outlook of this budget, given the higher MSP, even though he may have curtailed other expenditure, it comes on the back of higher commodity prices, including higher oil prices. So does this change your outlook on inflation for the rest of the year in India?
No, it won't change our outlook because I think right now it's really the energy and commodity story that matters more than what is happening with agriculture. Because, those prices have been fairly muted in any case. If there is some emerging upside, I don't think that will be the game changer. The game changer would be if there is full pass-through of $70, $75 oil in pump prices, in electricity, in gas, then what happens to inflation and, more importantly, inflation expectations. Worldwide, you see right now not much change in underlying actual inflation, but inflation expectations, whether it is read from the TIPS numbers in the U.S. or surveys all over the world, they are gradually ratcheting up. And it has very little to do with, crisis in any agriculture or any other areas. It's purely driven by energy and also the fact that growth is picking up. So it's a 1-2 punch, and RBI, I'm sure, is going to be wary of this.
So what would your outlook on rates specifically be, and also the rupee as a result of that, Taimur?
Yeah, so we're going to leave the rates forecast unchanged still. I don't think that the RBI would quite want to, shock the system by hiking rates. So we will leave it for the calendar year more or less unchanged. 2019 is a whole different story, especially in the back of Fed rate hikes. But as far as the rupee is concerned, it's been, a wonderful time for EMFX. Everybody has gained at the expense of the dollar, and, sort of fear of protectionism from the U.S. in a way has been an endogenous acting force, if you will, pushing the rest of the world's FX down. I think dollar rally is imminent, and whether it is against the euro or the rupee, the rate hikes as they get priced in fully out of the U.S. and the market sort of starts absorbing the implication of the widening rate differential, I think EMFX will sell off, particularly oil importing currencies like Indian rupee. So rupee towards 65 in my view.
All right, Taimur, thanks very much for joining us for those quick views on the budget. Guys, market point of view, you see this moving the market in any substantive way after what we've already seen happen in the last half hour? I mean, this event is over and done with right now.
Yeah, by and large, I think the capital gains we talked about. I think I'd like to make a quick comment about the agri support prices and the impact on inflation. Sure. I think if you take a step back, you had dollar weakness in the last few months. As Taimur mentioned, you could see a short-term dollar rally, but the long-term view appears to be one where the dollar will continue to weaken. And that has positive implications for commodities across the world, industrial commodities and oil. So that will obviously feed into inflation. Here in India, you might have a situation where the rupee might temporarily weaken, but eventually strengthen over the next 2 or 3 years. That might mitigate some of the effects of inflation and commodity prices. In that context, I think a higher MSP for agriculture prices, to my mind, gives the farmer a better visibility in terms of the IRR, as Partha mentioned, and that might actually increase agricultural productivity and sort of dampen prices, volatility of agri prices over the long term, which I think will be a good thing.
That's interesting.
Just a couple of things, Menika. Do we know what oil price he has estimated his revenues on? I think that's a very critical
No, he didn't say anything about that.
Yeah, he didn't even mention oil.
He did.
So that is a very important thing he didn't mention anything about. What are all these numbers predicated on? I think that's important for us to dig out. And you know, Neeraj, the market's going up. I think there is an inbuilt incentive today for the markets to go up because you're grandfathering at today's ending prices. So there is an inbuilt incentive to go up.
Sorry, Nilesh, you want to come?
Is it yesterday's?
31st. 31st.
Yeah. Oh, okay. Sorry. Then that's done. Yeah. Then that's done. So then it's a regular sort of bounce.
So, hey, Nilesh, you want to come in on this? I mean, you know, a lot of things that were expected from a market's perspective actually haven't come about, right? People were thinking corporate tax cuts, if they come in, would be beneficial. LTCG not coming even with these clauses that have come about. And fisc deficit, the markets are hoping that even if it's 3.5 for the year, it'll be 3.2 or lesser, hopefully, for FY19. So all of those things actually haven't happened.
Well, but for the time being, I think what the market is really looking at is that no negatives is in a way a kind of a positive.
But that's a bit of a cop-out, isn't it, Nilesh? I mean, if this is the last year he had to present anything ambitious next year as a vote on account, really, has he made use of that opportunity? Though one might argue whether he had that much of an opportunity at all, given the fiscal room, but has he made use of that opportunity at all?
Well, I think probably right now, I think there could be two kind of imponderables or two kind of negatives which he could be thinking about. One is, of course, crude oil. I mean, he really doesn't know. It's tough to forecast how it will shape up for the rest of the year, and that in a way will determine the kind of fiscal space he has. And two, of course, is going to be things like outlook on monsoons and really if the economy picks up. So I think these are some of the things which in a way he's keeping some kind of a cushion. And one has to keep in mind that he's kind of delivered this budget keeping in mind some of these kind of variables which could play out the other way or not necessarily in a favorable manner. So the way I look at it is that I think one is for the first time I'm seeing the finance minister to be extremely aspirational on growth. I think he started his speech saying that we are set for kind of an 8% growth or something like that. If you really look at what he's been saying over the last many months is that, you know, growth in excess of 8% is challenging. He's always kind of talked about 7.5% growth. For the first time, he's kind of alluded to an 8% growth. So I think that's very healthy. And two is, of course, I think in the current scenario, 3.2% or 3.3% fiscal deficit, I think is commendable. And if he achieves on that, then I think that would be fantastic in a year like this where the macro doesn't seem to be all that great. So in a year where macro doesn't seem to be all that great, I think a 3.2, 3.3% fiscal deficit, I think is fantastic. In addition to that, what we're seeing is that this is one quarter where the earnings have started to pick up and pick up in a significant manner. If this starts playing out over the next 3 to 4 quarters, we have an 8% GDP growth with a limited fiscal deficit. I think that really bodes well. And lastly, on inflation, be it MSP, be it crude oil, but we've seen a period of 2002 to 2007 where there's been strong inflation, but that in no way has hurt growth or that in no way has hurt corporate earnings. In fact, corporate earnings did very well. You know, so I'm just saying is that maybe inflation may not, limited inflation or measured inflation may not be all that bad for markets.
Okay. I think I would put to you, Partha, the question on whether you think this was an opportunity lost or you think he did the right thing, because the chief economic advisor 2 days ago was telling us and everybody else just this, that look, you've got to clean up GST and stabilize that. You've got to finish the divestment of Air India. You've got to finish XYZ. Just do all of that and don't do more. If I remember correctly, the headline we put out was you don't need to keep doing more and more. Just do what is on your plate. Do that well. Be done with it. Growth is already showing some signs of recovery, and the rest will sort of organically take care of itself. Would you agree with that?
I would agree with the economic advisor state that we have to, give a very measured pass. But I would like to look at it differently. First is let's look at what needed to be done on the rural side. And I think it's a big part when we talk about 60% living, then what is that which is happening? And I said if you focus, and I said this before, if you focus on produce, process, and prosper, which is the output part of it, and he's addressed pieces on all three, which is what can we do to help production and what can we do to bring more clusters, the village clusters, and the point he made about a food court, through digital food court getting a global footprint. This augurs very well for the rural market. I think in that side, whatever budget can do from a point of view has been done. Okay, so that's I think a great opportunity which has been leveraged from that point. I'm not talking anything else, just rural, and I think it's a big thing. When we come to the corporate, we have been reeling about profit before tax. If it grew at something, profit after tax was a much lower number because we've been higher taxes than what it is, and it had gone up. And this was an opportunity to give relief because this eventually cycled back to wealth creation for everyone. And that, though under 250 crores it's been done, and I think it's a good move. No quarrels with that. But that partly could have been extended. What has resulted it? We have again got some increase in tax. Yeah, that 3 to 4% surcharge would mean some increase. I would assume it's so that's increase. So that's an opportunity which is missed from my point of view. But on a no concessions for the corporate. The compliant ones, no compliance. Yeah, so they are not got any benefit. So that's the little bit I would leave on the table saying I'm disappointed personally from this. But from a rural point of view...
enough for you to feel confident about a recovery in rural consumption?
Yeah.
So much of your business is exposed to rural consumption.
Yeah. So just to give a perspective...
just want to make that point, sorry, but you were talking about the excise duty on petrol and diesel. Raghav, we were talking about this. I think
cuts excise duty on petrol and diesel by 2 rupees.
Yeah.
No, now it's all emerging in the fine print, I would imagine. So
I mean, this is a positive.
Yeah. This is clearly a positive on an overall basis from an inflation point of view.
Sorry, but you were making
but coming back, I think from it was very important to do that noises. And to your point, Menka, I think I told you, a week or 10 days back, we were on the same stage looking at expectation, and I told you that, rural market is looking up. If I look at January figures in terms of volume growth, I hope it had come out by now. But tractor would be in the very high level of growth which is seen only with other commodities you will see in the tractor area. And I'm sure the other parts, rural market will show that buoyancy even in January. So I think it's already on the path of recovery, the 8% towards the path. And all these measures will only go to supplement that thrust which is seen. So I will see it as very positive.
This is a positive, this excise duty cut, but it will feed into the fiscal deficit number. So we need to see the math on the fisc side on how he's done 3.3, and I'm just seeing some more flashes come out, and I think they've moved the 3% fiscal deficit target now to FY21.
21.
21, yeah. So it's gone along, which anyways is out of their control. I mean, there's no point them talking about FY21 unless they're so sure they're going to come back and make government.
Yeah,
right?
even
so,
then.
I mean,
even
then.
But what are the bond markets doing?
7.48 was the last that I saw.
That's what it is.
We should actually get in the bond yields on the screen. 7.48. So
those have hardened.
Further.
It be a function of the borrowing number.
Borrowing number as well. But Naganath, I just want to get you in, Pranav, a question for you as well. The expectation pre-budget was that there will be some big move done either to kickstart a big investment-led spend, or if not that, leave a lot of money in the hands of the consumer. While there have been some standard deductions, and you can argue the MSP probably does that in some small way, no path-breaking moves here.
No, I think this MSP move, the way I have understood it, is quite a big one. Actually, as Partha was mentioning this earlier, I was reflecting on it. If you're a farmer, like I said, and if the cost of production equation is well anchored, then I think it gives great visibility in terms of the return you can make for a given volume of produce. That will encourage the farmer to produce more. And therefore, you'll have higher incomes on the back of higher volume of agriculture produce, which, like I said earlier, helps dampen inflation, but at the same time contributes to higher incomes for the farmer. And that will spur rural consumption across a huge number of people. So I think that's a big one.
But did I hear him right when he said that it's already been done for the Rabi crop, and it's only now I'm extending it to the Kharif crop? So it's not something new. If I remember him right, he said 1.5 times we did for Rabi, and now for Kharif I'm extending it to all the crops.
So you're right about the specific crop that he mentioned. Yes. I don't know whether he said he had already done it for Rabi or not.
I think he said Rabi. I may have it was just one line.
Okay, so we're still checking to see if the fine print is all out. A couple of other questions that I wanted quick clarifications from you, Pranav, on this. He did mention something about a standard deduction and an exemption. Is he really putting any substantial money in the hands of individual taxpayers? Because I couldn't quite clearly understand what he was referring to.
Yes, if I recall right, he was talking of almost quite a lot of money when it comes to 40,000 as a standard deduction for taxpayers.
So what changes? I'm so sorry. I'm really poor at this. I don't understand.
So depending on the tax rate which applies to the particular salary taxpayer, effectively his taxable threshold goes up by 40,000 rupees. And to the extent the transport allowance and the health benefits reduce, I'm not too sure that are going to be as significant for many of the taxpayers. So I think this 40,000 across the board would still, at least I think 50 to 75% of that is an additional advantage.
So what he was allowing as a transport or a health allowance, he's taken and put it into standard deduction.
Yes. Just as mathematics. Just as a mathematics, 40,000 is what it new one. The earlier one was 15,000 for transport and 10 for 9,600 or 10,000 for 25 versus 40
is now.
And let's see what else is included. So it's some benefit, but not substantial.
Correct, but not everyone probably was using the medical and the transport fully as well.
So this just makes it a little more less hassle sort of kind of point of view.
Plus, I think more wider base of salary taxpayers would take it. What I was disappointed was the corporate tax rate reducing only somewhat, because across the world we are seeing a drop in the corporate tax rates. And while the global economy is picking up, we are talking of Make in India, we are talking of generating employment. I think the Indian industry had to be given that competitive equality, if not advantage, in a globally competitive world. So I would have felt he should have done something that also would have shown a commitment being met. I know there was a big fiscal constraint and so on, but I somehow think something on that front would have certainly helped.
Across the world is mostly North America. Other countries are considering reacting to what Trump has done so far. But really, how do you explain, at a time when you have no fiscal room, how do you explain being able to take away this bit, right? So.
Well, very true. But at the same time, most other countries already have a low corporate tax rate, Menaka. So it's not that it's only the US. If you see most of the countries, otherwise, the corporate tax rates are much below the Indian corporate tax rates already.
But don't we also, effectively pay only 20%? The rate may be 35%, but our companies effectively pay only 20%.
I'm not too sure, because with
once you take all the deductions,
correct. Once you see all the incentives and deductions getting phased out, and most of them are already gone or will go by 2020.
Yeah.
So as I see it, the corporate tax rate effectively now is going to be upwards of 25%. We don't have the latest data, but I would feel it will be far upwards of 25%, even with all the incentives, etc.
So to give that color to the as a tax point of view, corporate tax, the effective tax have already gone up. If you just take the deductions that have been removed, it will be 3 to 5%. There is long-term incentive for setting up in a particular zone or something that if you take out of the equation, clearly it's gone up by 4-5%, and we thought some part of it can be clawed back by the top line coming down, which it has not. So it's further
True.
continuing of not.
Menaka, again, when it comes to fiscal deficit, he's done a pretty good job, but he could have probably done a little more on the disinvestment side to be able to ensure that you revive investment. Of course, on the rural consumption side, probably MSP.
Well, no, I think any number he would have put that was more ambitious than 80,000 crores, given that the 72-74 was also a record number and a fairly ambitious jump. The truth is that we are not able to move fast. Like last year, he had said 4 railway corporations will come to the market. We've realized in the year that's gone by that they're not ready to come to the market. They will probably come to market only on FY18, right?
And I assume this 80,000 includes Air India. So a big chunk of it would be Air India.
We don't know how much of it will get done so quickly as well.
Yeah, right? But assuming that Air India gets done this year, that
all
would go.
4 pieces as they hope to.
The big one is going to be the domestic and the international carrier, right?
Yeah.
That's the big one.
Insurance companies.
Yeah, I think we have the FM speaking right now.
The Prime Minister Modi is speaking. I think
so we should cut across to him for a bit.
Yeah.
तो देश के छोटे उद्यमियों की वेल्थ बढ़ाने के वाली भी योजनाएं शामिल है। फूड प्रोसेसिंग से लेकर के फाइबर ऑप्टिक्स तक, सड़क से लेकर के शिपिंग तक, युवा से लेकर के सीनियर सिटीजन तक, ग्रामीण भारत से लेकर आयुष्मान भारत तक, डिजिटल इंडिया से लेकर के स्टार्टअप इंडिया तक यह बजट देश के 125 करोड़ लोगों की आशा अपेक्षाओं को मजबूत करने वाला बजट है। ये देश के विकास को गति देने वाला बजट है। ये बजट फार्मर फ्रेंडली, कॉमन मैन फ्रेंडली, बिजनेस एनवायरनमेंट फ्रेंडली और साथ ही साथ डेवलपमेंट फ्रेंडली भी है। इसमें ईज ऑफ डूइंग बिजनेस के साथ ही ईज ऑफ लिविंग उस पर भी फोकस किया गया है। मध्यम वर्ग के लिए ज्यादा सेविंग्स, 21वीं सदी के भारत के लिए न्यू जनरेशन इंफ्रास्ट्रक्चर और बेहतर हेल्थ एश्योरेंस, यह सभी ईज ऑफ लिविंग की दिशा में ठोस कदम है। हमारे देश के किसानों ने खाद्यान्न और फल सब्जियों का रिकॉर्ड उत्पादन करके देश के विकास में ऐतिहासिक योगदान दिया है। किसानों की स्थिति को और मजबूत करने के लिए और उनकी और आय को और बढ़ाने के लिए और उस दिशा में इस बजट में अनेक कदम प्रस्तावित है। गांव और कृषि क्षेत्र के लगभग 14.5 लाख करोड़ रुपए का रिकॉर्ड आवंटन इस बजट में किया गया है। 14.5 लाख करोड़, 51 लाख नए घर, 3 लाख किलोमीटर से ज्यादा की सड़कें, लगभग 2 करोड़ शौचालय, 1.25 करोड़ घरों में बिजली का कनेक्शन। इसका सीधा लाभ दलित, पीड़ित, शोषित, वंचित ऐसे समाज के आखिरी छोर पर बैठे हुए अपने भाई बहनों को मिलेगा। ये ऐसे कार्य हैं जो विशेषकर ग्रामीण क्षेत्र में अपने साथ रोजगार के नए मौके भी लेकर के आने वाले हैं। किसानों को उनकी लागत का 1.5 गुना मूल्य दिलवाने की घोषणा मैं वित्त मंत्री जी विशेष रूप से सराहना करता हूं। किसानों को इस फैसले का पूरा लाभ मिल सके, इसके लिए केंद्र सरकार राज्यों के साथ चर्चा करके एक पुख्ता व्यवस्था विकसित करेगी। सब्जी और फल पैदा करने वाले किसानों के लिए ऑपरेशन ग्रीन्स एक कारगर कदम साबित होने वाला है।
All right, that's Prime Minister Modi commenting on the budget. I think there's some more fine print emerging as we see the budget documents get uploaded, and we should get comments on that because they will be impacting stocks. And I think the big change here is in customs duty. Pranav, see if you can help us understand this. He says he's abolished the education cess and secondary and higher education cess on imported goods, and in place imposed a social welfare surcharge at the rate of 10% of the aggregate duties of customs on imported goods to provide for social welfare schemes of the government.
Right, and unless we see the small print, the fine print, Menaka, it's not very clear as to what exactly would be the impact of this.
But he's clearly increased customs duties on a few items like TVs, mobile phones, and from the way this is worded, this also suggests an increase in the customs duty collections.
Correct,
right?
and he says, according to the annexure C, all items will have this particular social welfare cess.
Right.
And what all gets covered, that's what we need to probably get into the fine print of.
Okay, but effectively that would mean that all of these imports would get more expensive.
That's right.
In the time being. You know, Raghav, I think we're still scratching our heads to understand whether he's made the best use of this opportunity or not. You said first that he's played it safe. My question to you is, did he have any other option? Or do you believe that, you know, he should have made space for that option, given that he's going into an election in a mood that's maybe not working towards his favor?
Well, you know, there's precious little you could have done beyond what he's done. Because this is the last year of the government. You are facing more headwinds now than you have in the first 3 years of your regime, whether it is oil prices, whether it's electoral setbacks. So, you know, I think he had to play safe. Now, there are some big grand announcements. 1.5 times MSP is a grand announcement. Now, I'd like to see the mechanics. I'd like to see whether they actually are able to do it, because if indeed they're able to do it, I understand that it may be inflationary, but as has been said on this panel, it can also have extremely positive effects. But it's such a sort of dramatic change that you want to be sure that the announcement matches the action. And the other grand announcement is this 10 crore families. This 10 crore families getting 5 lakh rupees of private hospitalization, not government, which is in any case free, but private hospitalization up to 5 lakhs for a family of 5, they've estimated. Now again, big announcement, but in terms of its implementation, in terms of how it's going to play out, what are the allocations made for it, so are these going to be statements of intent that we will now see them play out mature over the next 3, 4, 5 years, or are they going to make a dramatic difference on the ground this year?
Yeah.
I think those are the things that you need to be. If they do, and I find it very difficult to believe that you'd have the architecture to implement something like that overnight. By the time you put together the architecture for this universal health scheme,
MSP might still be a slightly more near-term beneficiary.
MSP is an executive decision.
Yeah.
But my point is, it is so dramatic that the impact can be so large in the price architecture of the economy that you need to be very sure. I mean, if indeed you're going to get 50% more on every potato that you've produced, then obviously no potato is going to be thrown. So I think
I'm so sorry. I'm looking at some of his tax estimates, and I know you were talking about STT. Budget estimate for FY18 was 7,767 crores. Revised estimate is the same. The estimate for FY19 is 11,000 crores on STT. So not only is it not going away, he's hoping to milk it for a lot more revenue from that point of view. Can't see any other big jump, with the exception of surcharge. Seems to have moved up very, very considerably. So he said budget estimate for surcharge was 9,347 crores. Revised estimate is 9,347 crores for FY18. And then he said for budget 2019, the estimate is 36,894 crores.
So
wow.
Therefore
this
the custom.
Number I'm reading off, yeah.
So
education cess in budget estimate for FY18 9,662. Revised estimate for FY18 9,662. For FY19 19,923 crore rupees. So he is taxing you more. He just didn't tell you enough about it in the speech, but he's taxing you more because surcharge and education cess is widely applicable across the economy, isn't it?
Right, but he talked of only a 1% increase in the cess, which is about a 25 or 33% from the current cess, 3% to 4%.
So this surcharge possibly includes the customs surcharge.
Yes. And
this
whereas
possibly
the
includes the customs surcharge,
correct.
No. But
otherwise, why would you have a jump from 9,000 to 19,000 crore?
Yeah.
Partly compliance as well, but major has to come from.
No, this does not include the customs surcharge.
This is only direct tax.
This is only direct tax. The social welfare surcharge that he's spoken about in the scheme was to collect 1,300 crore rupees in FY18 and is estimated to collect 8,000 crore rupees in FY19. You start looking at the fine print and you can clearly see that he has raised taxes across the board.
Significant revenue increases, yes.
I mean, these are not small numbers to go from 9,000 to 36,000 crores on surcharge. That's a big jump.
That's a huge jump. I wonder what's the underlying calculus there. I mean, I think those are the things you'll need to look at much more closely. And of course, also on the universal health scheme, what is the outlay he has put down for that scheme?
While we just I mean, okay, I don't know if we have those numbers as yet, but I'm sure.
No, we do. The expenditure budget is up. I'm just trying to look at that and see if I can get more details. But maybe we want to check markets at that point.
Yeah, I just want to check markets for a bit and get in Naganath. And I think I'm told Hiren Ved, also director and CEO at Alchemy, is also with us. So just a quick perspective from both Naganath and Hiren on this. As we speak, just want to mark, ITC is up 5.5%. I think no bad news is good news for the cigarette space as well, because ITC, Godfrey Phillips and a couple of others are probably those which have this budget movement. Otherwise, I don't think there are budget-related moves that are happening. There's a broad-based move in private banks which is moving up as well. So actually a similar question to both of you, and a lot of viewers tuning in right now as well, I'm told. A lot of questions on social media. We'll try and answer some of those. But Hiren, your initial thoughts really on what you made of the budget? It's you know, from a large picture perspective, there are probably some negatives out here, but none which is very untoward or retrospective. Is that probably positive?
Yeah, I think, you know, I think from our perspective, I think the big picture message, you know, of this government is that, look, I'm going to prioritize my resource allocation to the people who I think need it the most. And the rest of the people will have to be in waiting, or will have to pay up a little bit so that they can spend those resources to the farmers, to the common guy, to the marginal, you know, person in the economy. And I think that is the message that has been consistent throughout, and I think the budget just carries forward that message. Very clearly, one of the priority issues this government had was the rural stress, the fact that that was amplified in the Gujarat elections and you know, elsewhere. They don't want to give the opposition any room to say that, look, you know, this is an area of stress and you guys haven't done anything about it. B, I think it's also not only good politics, it's also good economics, because once you revive rural consumption, you will have improving capacity utilization, and improving capacity utilization will eventually then kick into private investment. So I think the best way to do that is how do you achieve both the objectives, you know, and I think that by stimulating the rural economy, he's kind of achieved that. But I think what is more important is that both the cost plus formula for the MSP coupled with the health insurance is like laying down a security, social security cover for the poor and the marginalized and the farmers. And most of the times, you know, they would spend less because they would save, because there could be unexpected health costs, or they were not sure whether you know, you would have a good monsoon, and therefore, you know, they would make the money on the farm income. So by securing their bottom line, so to speak, I think that should give them less variability and less you know, or more visibility to the farmer on his income. And therefore, this should help them to go out and spend more and invest more. So I think that's the good part of it. I think the only thing was, you know, obviously, you know, most market participants didn't expect in the hearts of hearts that he would bring in a capital gains tax. But I think the impact of that is not such a big body blow because of the grandfathering clause that they have put in. So you're at least protected on the gains that you have made as of 31st January. You know, and therefore it's only incremental from here onwards. And the upside of this is that this sword was always hanging on market participants in every budget. The fact that this is out of the way is itself, to my mind, a big relief. So now I think people can get back to what, you know, what they were doing, and, you know, keep harping about this every budget, saying, is it coming, is it not coming? So I think on the whole, it's you know, as I said, it's a balanced move by the government. I don't think he could have done anything significantly different. I think he's prioritized, you know, very clearly where he needed to prioritize, and he's also given a message that, look, I mean, those who can pay for it, you know, will pay for it, and you know, as the economy grows, you can take care of yourself. Let me take care of the guys who can't.
Yeah, I guess so. Okay, then I'm told we have to thank you at 13:45, so I'll do that. But thanks so much for joining in for that quick perspective and giving us your thoughts as well. Pranav, I think this ties in with what you were saying, and I'll get in Naganath's comment on this as well. I think the pre-budget discussion that we had, you were making this point that if it has to come, let it come and get done away with so that people have clarity about what they do with their investments going ahead.
I think so, because this form of uncertainty helps no one, and actually it creates more kind of instability in the minds of people. So at least now we know where we stand. We know that the markets are at quite a high number, and that number is grandfathered, the value as on 31st January 2018, where the markets are already at a good number. So I think that's a good sign. Living up to the promise that the appreciation is not going to be taxed retroactively, but only prospectively, also shows a very mature action on the part of the government. If you have to tax capital gains, at least you are ensuring that we'll meet our commitments that investments already made will be grandfathered completely, including the appreciation.
I'm so sorry, I'm going to interrupt you. I'm going to ask the panel to stay with us because we are joined now by Divestment Secretary Neeraj Kumar Gupta. And, you know, I think that 80,000 crore number is an important one to try and understand more. Mr. Gupta, good afternoon. Thank you for joining Bloomberg Queen. Can you get into the details of how you expect to be able to make up that 80,000 crore number, which, coming on the back of an already very ambitious 72,000 crores, is definitely, you know, a big one?
Well, on 72,500 crore target, we have adopted multiple approaches, and we have already crossed 92,500 crore till today.
Right.
So 80,000 crore target is for the next year. This year, the target has been revised upward to 1 lakh crore. We have to work further on that target at this point of time. But I can assure you the paradigm shift which has taken place in the divestment process to more efficient investment management process is really opening a lot of venues and possible options of divestment of stakes in different CPSEs. Thereby, we will be using all these tracks which you have seen and maybe expanding more in terms of offerings to the market. And you can be assured that investor interest is definitely supreme, because that really leads to value creation in the CPSEs.
Yeah, absolutely, Mr. Gupta. Could you break it down for us? Where do you expect that 80,000 crores to come from? Are you factoring in Air India in that? What about the 4 railway corporations that were to list in this existing fiscal?
Well,
are they accounted for in the 80,000 crores as well?
Definitely, there are 4 tracks. Minority stake sale is one. We have a long list of IPOs which is coming up gradually. After a gap of 5 years, we have listed 4 companies this year. So more companies will be getting listed. Then we have economic mergers and acquisitions which are taking place. That policy was announced last year. We are having a strategic sale which is taking place. And we have created more investment instruments, like Bharat 22 ETF has become very popular. Both ETFs which are promoted by government, CPSE ETF and Bharat 22, both exist as a product, and they can further be offered.
So may I ask you, what's on your minority stake sale list for this next fiscal?
That you definitely cannot ask, is highly market sensitive, but we will wait for the right opportunity to divest one of them or any one of them, whichever is best time for divestment.
But okay, can I at least ask you, this is the same list of CPSEs that we're working with, right? Which included at one time, you know, the sale of Hindustan Aeronautics. Are you now considering?
There are 44.
44.
There are 44 listed companies. So you can expect divestment in any one of them in the market.
Okay. In terms of IPOs, are you referring to the 4 railway corporations, sir, or are there more? Because there was also some mention in the finance minister's speech of merging all the other insurance companies and listing them. And so I'm just curious to know whether you will be looking at some of the other insurance companies besides the 2 that you did list already in this fiscal, merge them next year and list those as well.
See, you are mixing the 2 things.
Okay.
The listing of 14 CPSEs, which is on the card and is progressing well. 4 of them have already been listed after a gap of 5 years, and we will be listing more CPSEs. That is on one track. Merger of insurance companies, it has been announced the 3 other general insurance companies will be merged into one entity, and that will be taken for listing. That is the second announcement, and that will also progress logically.
So that falls into the economic mergers bracket that you were talking about, which is what ONGC and HPCL was also about. Is that how you're accounting for this?
See, for creating value of investment in the CPSEs, the policy of acquisition and merger on the economic basis was announced in the last budget. And that is a logical expansion of that policy. Whichever company or whichever CPSE feels that they can acquire more economic assets and by that very process can create higher value of the enterprise, definitely government will look into it positively. Merger of insurance companies is probably one of such announcement in the same line.
So you made a big windfall this year from that ONGC acquisition of HPCL. So you're hoping that, more than a third of your 80,000 crore rupee target will come from this insurance merger, because it will require one insurance company to buy out the government ownership in the other two, I would imagine.
First of all, you should not call it a windfall. You should understand that top 5 oil majors in the world are vertically integrated economic entities. In India, this will be the first vertically integrated economic entity in the oil and gas sector, and this was announced in the budget itself. Number 2, if you see the operational synergies and economic and functional, operational synergies, there is a lot of synergy in terms of exploration, in terms of refining, and in terms of distribution. Think of a company which is getting almost 60 to 65% synergies in operation. How much that will get converted into economic gains. So that is how we are creating higher value for the ONGC, which may be having liquid assets which are not giving them sufficient dividend. They have to either expand business or have to acquire business. So it is not a windfall. It was some sort of dream acquisition by ONGC. It had all economic rationale, and it has taken place in the most professional manner. So wherever there are such scopes are there, we will definitely look for them.
So, sir, if I may, there is also talk of some other vertically integrated oil PSUs coming into being after a successful ONGC HPCL deal. Would those happen in the current year? Because you mentioned that your current year divestment target also has been enhanced. So do you plan to complete those in the current year, or would it be postponed to FY19?
I have no such proposal. I think it's more market speculation.
Okay.
It has no basis at this point of time.
Okay, fair call. There is also some announcements about how the government will now launch a debt ETF for raising debt financing for the government. Could you throw some light on this, sir?
See, the government has always, as per the investment management policy, insisting that the balance sheets or the net worths of the CPSE should be leveraged adequately to expand their business, and there should be expansion of capex and economic activity by CPSEs. This is in line with the drive to improve economic growth in this country. In that very process, if you see in the fixed income segment, almost 15 CPSEs have been raising money through bond route in the bond market. Almost 3 lakh crore had been raised in last 3 years, and the traded volume of these bonds is nearly 34% of the traded volume of the fixed income bonds in the market. So there is a lot of attraction. So there is a need to aggregate their strength, their borrowing requirements, and I'm sure if we can come out with larger offerings, it will provide much higher depth and liquidity to the bond market, especially in the CPSE space. So we will definitely look into the possibility of creating a bond ETF consisting of CPSEs, and out of these 15, 12 are AAA, which are constituting almost 97% of the borrowing. So all 3 AAA rated CPSEs bond ETF is definitely a possibility which will bring out higher liquidity, ease of trading, ease of redemption, and not only that, it will definitely bring down the cost of borrowing for the CPSEs, which will further help them in expanding economic activity.
All right, Mr. Gupta, we appreciate you joining us this afternoon and clarifying all of those issues. Thank you very much for your time and for speaking with Bloomberg Quint. They have enhanced the expenditure amounts for this year quite substantially. I think I'm just looking at so in a revised estimate 2017-18, the total expenditure has been kept at 22,17,750 crores, and it's more by the budgetary estimate of by 71,000 crore rupees. I think that's where the deficit expansion comes in, and that's where the additional tax outgo, I think, is also going towards. So I think as you look at the numbers more and more, we are going to be paying more tax in this year, indirect or otherwise. He couldn't do it through the other indirect taxes because of the GST Council, so he's done it through surcharge and cess.
Right. I think it's the corporate tax rates have hardly dropped except for small companies. Individual tax is marginally dropped with this 40,000. The way I look at it is I would be very watchful of the inflation number particularly. If that goes up and if interest rates are to climb, that might further impact corporate balance sheets and the investment cycle, which is showing signs of revival. Yeah. So that's something that I would be very watchful about. But otherwise, a big rural focus, which was expected in some sense, and I think it was also politically probably the move that the government was likely to do.
Yeah, let's do closing comments. Naganath, how you as you listen to this, higher taxes, higher cesses, higher surcharge, higher expenditure, which we had anticipated because of the breach in the fiscal deficit. Does it seem to you as beneficial as you felt when you first heard about the National Health Cover Mission and all our eyebrows went up?
Well, there we need to see what the details are. But like I said earlier, I think there is clarity on the long-term capital gains tax. That's a good thing. The other more important thing is the clarity on the income stream to the farmer, which I still maintain is a big thing in the medium to long term. And if that results even in marginal inflation, in the long term, I'm pretty sure that with rising productivity, you will actually be able to contain farm product inflation, which has always been, quite volatile. So I think if we're able to do that with higher productivity, in the long term, we would have contained that agri-product price inflation quite significantly and decisively, and that will actually benefit, the country as a whole.
So you don't seem to be quite in sync with that?
No, you have to have the details out. I mean, for instance, do an MSP on vegetables and fruit. Yeah. These are very difficult things to do because they're perishables. You can't warehouse them. So I think you'll have to see the detailing. I'm just saying it's a dramatic announcement. What is the underlying architecture with which you can deliver it? There was a dramatic announcement on crop insurance as well. Yeah. That hasn't gone anywhere. So I'm saying these are, it's a big announcement, but does it today have more announcement value than actually what Naganath is saying? If you're actually able to deliver it into improved farm productivity, that's great. But for improved farm productivity, you need possibly, there are many other things you need to do. For instance, in contract farming, you can move and allow very large contract farms. See, my problem is that a lot of this stuff is all incremental and a lot of it is grand announcement. In terms of architectural change, corporate farming is something that we need to now bring into this country because otherwise landholding sizes are so small that productivity gains will simply never happen. So I think safe budget, expectedly safe budget, it's the last year of the government. These are not times to bring in transformational structural changes because you don't have the time to deliver on them. And therefore, it's with an eye on stability, which is all fine. And pretty much played the innings within the constraints. I mean, he's played according to the pitch, he's played according to the bowling, he's played according to the ground around him, and therefore played within himself.
Okay, Partha, final thoughts?
I think the final thought is equal to what I started with. Okay. I think it's a point of tale of two cities. On one hand, what we've seen, a far-sighted budget, as I called it, our focus on produce, process and prosper, and I think they've done Enam is one more announcement which we didn't get to talk about. Micro irrigation and expanding that is another. Water, underground water. All these are good basic initiatives to support the ecosystem in the rural market, and I think it's what. On the other hand, when you come to corporate, so Ranjish hi sahi dili dukhane ke liye.
नहीं आया साहब, रंजिश के लिए भी नहीं आया.
Well, I think we're going to leave it there, and I'm still trying to get my head around some of this fine print in tax.
I think the arithmetic is what you'll have to.
Yeah, and I think that's really tough to do on the fly right now.
Yeah.
But thank you all. I think the people that will be the most happiest are the insurance companies in this country, because they can see the prospect of big business for the next financial year. Everybody else is still scratching their heads to find out if they were better off at the end of this budget or not, and I suspect they're not.
Insurance and healthcare.
Insurance and healthcare. Yeah. Sorry, hospitals and insurance companies. But I'm just saying, everybody else is going to find out that the tax is going to bite them a little bit more than they had anticipated, especially the surcharge and the cesses. We don't realize these things because they don't factor in until we start realizing that the effective rate is a lot more than what the statutory rate is, right? So that'd be interesting to watch.
So you've had one more cess. You already had three. Three of Russia, one more now. So
and the education cess went up by 1%.
Yeah.
It went from 3% to 4%. These are not small things, Raghav. They keep increasing your effective tax rate at the end of the day.
You're preaching to the converted. I hate to say it. I never thought a Modi-Jaitley government would be a tax and spend government, but it has been a tax and spend government for the last 4 years.
These cesses were introduced as temporary measures to fund certain things. Now they've become, it's almost as if, I don't know what we pay the rest of our tax for.
Yeah.
Because we're paying a higher education cess, a secondary education cess, a healthcare cess. Typically all of those things which normal tax payments should take care of, we're paying for through cesses, right?
And some of the things, I know you're running out of time, but some of the things, he raised a little warning but didn't say anything, that outbound FDI from India is now $15 billion. We need to do something about it. He left it at that. Because 15 billion, he said, is a large number. But clearly there's a signal there that there could be some curbs on forex outflows if they find this an uncomfortable number. And the other thing that always sort of, you feel so unhappy about is that they're talking about, this is the 4th year of the government. They're still talking about setting up a committee to see how hybrid instruments can be brought into startups. For God's sake, the world has moved on with all kinds of instruments, and here you can't even do a warrant and a put and a call. So you're as medieval in your financial architecture as that. And if in the 4th year of a government they're saying we'll still set up a committee, then it boggles your mind.
I don't want to have to eat my words, but I think by the time markets close, everybody will have realized that they're paying more and they're not getting much more in return. And so effectively, you're going to wonder whether this budget really did anything to revive, animal spirits. We've been theming the budget on a return to confidence, and I'm not sure it does enough for the rural economy for a return to confidence, enough for the large corporate economy for a return to confidence, enough for the investment economy for a return to corporate, and fairly neutral on the market economy, so to speak, because, they've all come to terms with the LTCG bit. So, and the rest of us will pay more.
And the LTCG bit, the grandfathering has been done very intelligently. So, I mean, to that extent, they haven't done a retrospective.
Absolutely. That's all credit to them. I think one more thing that probably when you talk of the revenue numbers, I would be interested in looking at it a little more in detail is the buoyancy that he's projecting.
I haven't had a chance to calculate all of that.
Right, because he's already got some buoyancy after, as he claims, the demonetization and GST and so on. And now for the next year, what's the kind of buoyancy that is being projected given this already high base or whatever that he's got as a one-time shot in the arm? So that will be something that will be also very interesting to see, because that will reflect in the total revenue collection numbers as well, apart from the increase in the surcharges and the cess and so on.
Yeah, absolutely. Looking through that, you're going to take a quick break?
Yeah, we should take a quick break now. On the other side of the break, Manish Gunwani of Reliance Capital as well as Vikas Khemani of Edelweiss will be joining in. Do stay tuned. More on the other side.
Life's so lovely, live life happily.